The Bank of Canada is expected to cut interest rates by 0.5% tonight, making the Reserve Bank of Australia even more of a global outlier than it is now. The US and New Zealand have already made big cuts. Europe is expected to follow. Australian interest rates aren't really out of whack. They're just not moving because the RBA thinks the labour market is too tight. And the market odds of a rate cut here in December continue to fall. Today, down from 35 to 15%. But the exchange rate continues to ease because of the strength of the US dollar. Tonight, it's down to 66.7 US cents. The oil price rose again last night and is now up more than 4% in a couple of days because of concerns about supply disruptions in the Middle East. Now, the oil shocks of the 1970s were all about supply disruptions in the Middle East, but since then, it's not been a factor. The surge in the price before the GFC was due to demand from China and the US, and while there was some concern about supplies after Russia invaded Ukraine, the sanctions didn't work, and the price is now back to where it was 20 years ago. Share market overall didn't attract much buying after yesterday's big fall, although the supermarkets were pretty well bid after they blamed suppliers for the alleged sham discounting that the ACCC is suing them for. And globally, Tokyo fell, Hong Kong and Shanghai went up, and New York was flat. Now, there's a lively argument at the moment about whether American shares are expensive and about to fall. And one measure is whether insiders are buying. Now, I'm not talking about insider trading, but just directors and executives buying the shares in their own company. And right now, insider buying in the US is near historic lows. So those in the know aren't keen. And that's finance.